Good evening, everyone. Hope that you guys had a wonderful trading week so far. If you haven't taken any trades, I hope that you learned from just watching price action. Right, this week was not the easiest week, obviously, right? And we're going to show you why it wasn't such a easy week and how to predict these types of weeks, right? And remember, we have been saying that this week would not be easy, and just by looking at the economic calendar you can see that, correct? You can see that we have every day being a high impact news event, and whenever this type of schedule is released, we just focus on Tuesdays, Wednesdays, and Thursdays, right? Especially due to the fact that we have CPI, right, which will usually form the high or low of the week, as long as it causes sequential SMT, right? So whenever we see price action like this, right, just to make this crystal clear so we don't have to talk about this anymore, once we see price action like this, a scheduled news release like this for the week, where you have 1, 2, 3, 4, 5 days having high impact news events. You just focus on Tuesdays, Wednesdays, and Thursdays. As easy as that, right? And here is where we had all the quote-unquote sauce for the previous session. The audio wasn't recorded for some reason. I'm terribly sorry about that. So here, right, you can see that this is where we have our Fibonacci's. This is our range theory, right? For it to be classified as a range, right? And there are many ranges, many types of ranges, but this is just one that will help you to know what price should or should not do, right? So below the 50%, that is discount. Above the 50%, that is premium. In premium, 50% range, price is expensive. Here, price is cheap, right? Very low. Before this range was formed, we had sequential SMT between the quarters of the year, right? Right. This is one of and we've said this before, on the formation of this candle, these sequential SMT basically don't need anything else but just that SMT, right? Once the sequence is right and you are above the weekly cycle, then it's almost, I don't want to sound cocky or anything, but it's almost impossible for it to be wrong, right? And this is why we have always been screaming higher prices, even when this chop was occurring, right? Even when this was happening, when price was just going back and forth, we still wanted to see price above these highs, right? We still wanted to see the Nasdaq shoot above this high, right? And we don't pay much attention to the Dow, right? So the Dow isn't for trading, right? And I'm guessing that everyone here knows that the Dow is just for seeking, tracking correlations, right? Just as here. This is a concept that I call mirror premium and discount, right? So within the S&P 500, the gap within the lower half of this range was breached, it was filled, SMT occurred, job done, right? Here, there was no gap here for NASDAQ, but we did see SMT occur below the 50% of this range right here. And the main reason why this is the low for our range is why? Due to the fact that this is the low that gave birth to the sequential SMT, right? This is a swing low, right? Whereas this was a lower low. So yes, and here within the Dow, you can see that we have two gaps, right? Two main gaps. One here, same thing for the S&P 500, same thing for the NASDAQ, right? That's necessary, right? You need to see these gaps right here all throughout this entire leg. You don't want any of them to be filled, right? It's just breakaway gap, Price consolidates in this small candle, expands again, breakaway gap, expands. Can't go for this highs yet because we need to fill the liquidity voids, right? These are all liquidity voids unless you have sequential SMT occur within one, or unless you have mirrored premium and discount, whereas you have the S&P 500 trading below the 50% range, achieving a sequential SMT, or, and at the same time, you have the Dow doing basically the opposite of what this is doing in regards to the ranges, right? So the Dow is bullish in premium, while the S&P 500 and NASDAQ is bullish in discount, right? This is usually what you'll see, and due to the fact that these assets, their movement gave rise due to the fact that we had sequential SMT, but these assets were what caused the sequential SMT? The swing, the failure swing, right? Price failed to break below here, price failed to break below here, right? Which is why we see this deeper retracement right here. Whereas here, we broke below this low, sequential SMT. Just expect higher prices. Look how explosive this is, right? Very explosive move, right? And it's basically basically the only thing that caused this right here. Well, not the only thing. There's something else here, but the main thing is the sequential SMT, right? That's what you need to understand, right? So yes, we still have price going towards, we're taking out this target and this one, and we would still like to see the S&P 500 take out these highs, right? Down here, right, we'll be looking at a lower time frame SMT, this lower time frame SMT right here. Do you see right here within this fair value gap? And this is what it looks like here on the 4-hour time frame, right? So here, right, we had price open the week, right, form a large new week open gap, right? So price opened, traded below this low, price traded back within the body of this candle, then we expanded, right? So first of all, the main thing that occurred here was what? It was not price trading in the higher time frame gap, right? Because you can see that even after price trading in the higher time frame gap here, it ran higher, then it just came back to take this low out. It's the sequential SMT that occurred within the gap, right? So how do you use gaps? You wait for, and we're going to talk about other gaps too, right? And show you the indicator that will make it easier for you to see those gaps as well. Anyways, here, higher time frame gap, sequential SMT forming within that gap. And remember, we were bullish. This is not just me coming here, right? This is not just me coming here and being like, okay, this is just what happened the past week, and I never pointed a finger at anything, right? The reason why it seems that way is just because we're not within, very easy price action, whereas you could just look at a chart for a few seconds and just buy. No, now you really need to be digging into the charts, right? Until we get out of this, range business right here. And here, for the NASDAQ, you can see that we failed to take this low out during this first quarter of the month. Price traded higher. Here, we took this low out, sequential SMT, and then price traded higher again. But it did stay within this range, and you can see that this is extremely low probability price action. Now, right, this is something, right, so that will help you to understand how the market moves better, right? It's pretty simple. Right, these are new week opening gaps. This is the indicator that I usually use. So I have a specific template which just has new week opening gaps, nothing else. No markings looking for no SMT or anything like that. Right? Settings are here. Right, I usually use 3, right, due to the fact that I am comparing the current new week opening gap to the previous one, right? Usually, I use up to 5, up to 10 sometimes, but whenever I'm doing a comparison, then I just use 3, right? The goal is to find a current new week opening gap. So this current new week opening gap is the one from this Sunday of this trading week, even though this trading week is over, right? So this Sunday, this was formed, right? New week opening gap. This is the previous week's new week opening gap, as you guys can see. But here we have a new week opening gap forming within another new week opening gap, right? What does that make this gap? Now it's high probability, right? This makes it a high probability new week opening gap. Another thing that you will realize is that price tends to move from new week opening gap to new week opening gap, right? And whenever price is within a new week opening gap, that's when it usually gyrates around, right? As you guys can see here, back and forth, then it just expands. Found resistance right here. Fell again. New week opening gap. Formed within this higher time frame new week opening gap, or this previous cycle's new week opening gap. Price trades within it and expands. Right? And here, you guys can see we are looking at the FX triad. Right? This is the FX triad, which is comprised of the US dollar index, the euro, US dollar, and the Great British Pound. Right? There are a few things here that are brand new. The first thing that I will talk about is this right here, right? So here we had SMT, right? As you guys can see. And this occurred before the sequential SMT right here, right? So we had SMT right here. Price traded higher, right? Same thing here. Price broke above this high, traded lower. Price broke above this high and traded lower, right? Whenever you see something like this occur, right, where you have SMT leading to price going higher, but once price broke this high, you can see that we had I wouldn't call this a larger SMT, but the number of candles between this point, between this candle and this candle, are way more than the number of candles between this candle and this one. So we have a larger range sequential SMT than this one, right? So this, due to that, this becomes what? An SMT shift, right? Once price breaks above this high, this candle forms. What can you expect? Price to rush towards this low, right? Remember, well, most of you guys remember from Wednesday or stream, we wanted to see this fall lower, right? We already stated that this was the high of the week for the US dollar, and if that's the high of the week for the US dollar, then the low of the week should be in for the euro, and the low of the week should be in for the Great British Pound. So again, this is what you would call a SMT shift, just due to the fact that the number of candles in between this candle and this candle is less than the number of candles between this one and this one. That should be pretty easy to understand, right? Pretty easy to understand. What's another thing? This new week opening gap right here again. Yes, we're talking about new week opening gaps, right? price traded above and closed above this new week opening gap, right? But here, what happened? After we had this SMT, and listen, this in itself could be a pretty good trade, right? Even if you shorted here and got out here, that would be a good trade. Of course, that would be a good trade, right? This is the 1 hour time frame. You could be trading on the 1 minute or the 5 minute time frame. It's easy to take 3 hours out of this swing right here, right? And then you could get back in here and here again. Anyways, due to the fact that, first of all, we have a larger range sequential SMT. This line and this line is showing you what? The new week opening gap of this week. And price trades within that new week opening gap as well. We have the SMT shift right here, which is a true market structure shift. We'll get into that more as we go along. Here, SMT shift, price trades within this new week opening gap, creating a failure swing, while this asset takes out this pool of liquidity, and this one cannot do so. What's going to happen? We're going to see higher prices, right? Just as how we have been seeing, right? So the main component between all price moves and even, when we're not specifically looking for SMT, it's always there. It's always going to be there, right? Even right here, right? Where we see this candle trade below this one. Do you see that? That's SMT. That's sequential SMT, in fact, right? And why is that sequential SMT? We'll show you right now. And this is one of the main reasons why you do not want to do anything, right? Unless you see this concept appear in your charts, right? So for some reason, this template, that shows the daily cycle does not show for the dollar index. Not sure why, but it's whatever. So here you can see when did this occur, and remember this is fractal, right? And I'm going to tell you why. As my personal student, you will realize that, you will understand stuff more than everyone. Even if someone sees this video right now, they won't understand. And you know why that is? Because they won't study. They will not put the work in. It does not matter, what information you get from me. It doesn't matter what you're using. You need to become a master at that thing. You need to be seeing sequential SMT without even seeing the templates at the bottom, right? You should be seeing sequential SMT in your dreams, and then you'll begin to understand. You do nothing without it. It's a rule. Is it possible to do something without it? Of course. But why would you want to, right? So yes, here we had the high of the New York session for the US dollar index. A failure swing was made here where price failed to break above this high, right? And this occurred when? In the afternoon session. Here you can see that price did trade below this low right here, causing what? Sequential SMT, right? So here, the high today for the US dollar was formed by in the New York session. The low today for the euro was formed in the afternoon session, and the low of the day for the British pound was formed by. And when we're referring to the low of the day right now, we're talking about the time after the true open of the day was established, right? So we're not talking about the Asian session right now. Just talking about what occurred after the Asian session, right? So we dropped below the true open, expanded, there was sequential SMT, and then the rest is history. I hope that you guys got something useful from this. I'm terribly sorry about Wednesday. Not sure what happened with my microphone, but yeah, that's it. So yes, I hope that you guys take this information, study it, the shit out of it, right? Over this weekend, I'll be doing a lot of backtesting myself. And yeah, if you have any questions, hit up the assistant, Jacob, Lawson, Medic, preferably Jacob or Lawson or Medic. But yeah, hope that you guys have a wonderful day.